There are three legal forms of business ownership: sole proprietorship, partnership, and corporation. This video is about sole proprietorship. A sole proprietorship is a business that's owned and operated by one person, and that one person is responsible for all of that business's debts, if any debts are incurred. So, key points. It's one person working on this business alone. They own it. And, second part, that one person is responsible to repay any debts that the business incurs. Advantages of sole proprietorship. Well, biggest advantage, freedom. You're your own boss. A lot of people like that. There are tax benefits to being a sole proprietor compared to being an employee. For example, employees versus sole proprietors. Everyone pays taxes, both employees and sole proprietors. However, employees pay more taxes than sole proprietors. Here's why. If we were to compare the taxes paid by a sole proprietor in their business versus the taxes paid by an employee, we'd see the following. There's an income statement on the left for Clay Creations. What we see here is that the revenues generated started at $100,000. However, a business, a sole proprietor in this case, is able to reduce their taxable income by deducting the cost of any of the goods that they sold, as well as any expenses that they incurred in the operation of the business. So for example, wages, rent, insurance, and so forth. What we end up with is net income before taxes, or in other words, taxable income of only $36,000 versus an employee. An employee who earns $100,000 pays taxes of $27,000, 27.5%. Compare that to the sole proprietor who only paid $5,000 on that same $100,000 worth of income. You can see there's a big benefit to sole proprietorship. Sole proprietorship is very easy to start up, and it's very inexpensive to start up. Following website, approximately 20 minutes of effort, and about $60, you can get a business up and running and registered within Ontario. Some of the disadvantages of a sole proprietorship. It's very difficult for sole proprietors to raise money when they need to expand the business. So for example, the entrepreneur has this idea, they want to get a coffee shop up and running. They approach the bank. They explain their business plan to the bank, and they ask for a loan of $100,000. Unlikely that the bank is going to hand that sole proprietor $100,000. It's very risky. They might ask, do you have any collateral? What's collateral, you ask? Well, collateral, it's assets that the sole proprietor owns that could be sold in order to repay the loan back to the bank. Well, I own a house. In that case, the bank may issue the loan of $100,000 because if the sole proprietor is unable to repay the loan, the house can be sold and the bank can be repaid their $100,000. It reduces their risk. Another disadvantage of sole proprietorship. One individual has to do everything. There's no one to help you. You're alone. Unlimited liability. What's unlimited liability? Well, let's suppose the business does fail and it has a debt of $200,000. Employees need to be paid, suppliers need to be paid, and so forth. What happens? Well, there's assets that are owned by the business, all the equipment and furniture and so forth. That, of course, could get sold. It might be worth $50,000. And the debt of $200,000 gets reduced to $150,000 once any value left in the business has been sold off. Well, what's unlimited liability? Well, the creditors who are owed the $150,000, they want their money. The response from the sole proprietor might be, hey, sorry, the business went bankrupt. There's nothing left. Well, you have unlimited liability as a sole proprietor. So you personally owe $150,000. That's what unlimited liability is. So, the sole proprietor, after the business going bankrupt, might be asking themselves, where am I going to get that $150,000? The answer is their personal assets, their car, their savings, possibly their home. Sole proprietorship, advantages and disadvantages. Advantages, freedom. Tax benefits. It's simple to start up. Low startup costs. Disadvantages include it's difficult to raise money. Reliance on one person for all the skills and resources necessary to operate the business. And finally, and importantly, unlimited liability.